Hey everybody, wanted to drop a little video on what I'm seeing in this expanding series of videos on the Bitcoin complex on MSTR, some of the things that we're doing, which are pretty awesome. We've sort of been calling it very, very well. And, I kind of feel is a good example of, the way that a trade works out is preparation, having the right tools, having something work out, having the stock do what you needed to do. A little bit of luck, right? It kind of reminds me of the Lee Trevino saying, the more I practice, the luckier I get, right? So, and of course, the meaning there being, the more you prepare, the more you work on things, the more things are going to work out for you in the long run. Just a reminder, everyone, of the disclaimer. So that anything we talk about today is for educational, entertainment, and information purposes only. We think it's luck, but a lot of the time it's preparation. And so, trading is trading. We're going to have our stinkers every now and then, but this has kind of been fun here on MSTR. Been talking about. I'm not going to go over the entire setup again, but basically, the volatility option pricing got very, very, very low. And we saw a real underperformance of MSTR versus Bitcoin itself. So we can see right here in this period from early September up to about mid-November, we saw a massive outperformance of MSTR versus Bitcoin itself. So what that means is MSTR is performing relatively better than the underlying, coin that it basically holds a lot of. And then since then, we've seen an underperformance. So MSTR has pulled back. Of course, it got up to 550, came down to 300, but more recently, really, it's kind of gone from 400 down to 300. I got out of my last trade around 440, and I've been sitting since. And so it's been kind of a good example of how, listen, sometimes you just kind of have to sit on your hands and wait for the right signals. I hope you're enjoying the training in this video, and if you are, please do me a favor and take a moment to like and subscribe down below. That's going to encourage me to put out more great content on a regular basis. And check out my programs and community in the description, including my free options courses and ebook. Happy learning. I felt like this thing was, so many people had piled into this that people could really exit, especially if Bitcoin pulled back, but it didn't really. So that part of the equation didn't really happen. I kind of at one point thought, we're going to break through 90,000, and then that brings the low 80s, high 70s back into play if we get closer to that 200-day moving average, which, stocks tend to get to over time. Eventually, they're going to pull back to those levels. And I thought it was possible here, but it didn't happen. And so that only gave me further confirmation for the trades that we actually set up. And we did 3 different trades. And so the first one I wanted to talk about today was the long strangle. And so this is a long option strategy. And when you're long options, you really have to have a number of things working for you. You need volatility levels, meaning option pricing levels, to be very cooperative. They cannot be high. They need to be very, very low. They can't even really be mid-range to kind of low to mid-range. They really need to be quite low unless you already have a lot of momentum on your side. But if you're trying to pick a bottom, pick a top, being long options, you can't afford to be wrong for a month, right? So you kind of need things to work out quickly. So what's really important is that low volatility level, because when you're long options, you have that negative theta decay that's going to relentlessly happen day after day because you cannot fight the passage of time. But you also have that long vega exposure, right? So if you get in a little bit too early, you could lose money from further vega, from a big vega hit if you didn't get in. And in this particular position, it did actually go against me. I got hit on vega just for a couple of points, a very, very small amount. Mostly it was delta at first, because what I did is I positioned myself in a long strangle down when the stock was about $305. And I've already talked about my indicator, my skew indicator. It quite literally hit that indicator to an absolute precise moment. Look at this. We were sort of sitting around here, and this is where calls are more expensive. And I said, well, as soon as puts get a little bit relatively expensive versus calls, that to me is going to tell me there is a little bit of extra worry going on. And as a contrarian, I said, listen, that is the point at which I'm going to feel better about getting into the stock in some shape or form. And sure enough, we got up there, and literally at the end of the year, we nailed that top on my indicator, the 0 line, which indicates that puts and calls are more balanced. But for this particular product, that tends to mean that puts are quite expensive versus versus the calls. And so that to me sort of meant that people were kind of getting a little bit more nervous and maybe even excessively nervous. And so since then, look what's happened. We've seen this huge pullback in that skew. And so I would almost use this at this point as a place to sort of say, well, I think MSTR could probably get toppy maybe when skew kind of hits this level here, maybe down kind of versus the calls down around this level here. We've already pulled all the way back from here to here, which means the calls are getting a little bit expensive again on a relative basis. And if we get down to here, it means people are really going to start jumping into calls, and that might show us that there is maybe a little bit of an exhaustive kind of run to the upside that may have to pause for a bit. May have to, no guarantees on anything, but it could happen. And so I would be using this indicator again, maybe between here and here, as a sign of a potential top in MSTR at this point. It's already run up about $80 versus that low. When this indicator hit my spot, that's when MSTR hit 289 by the end of the day on a closing basis, and that was basically the low for the last couple months. I mean, within $1 or $2, as far as I remember. So that was it really nailed the bottom. This indicator nailed the bottom, and so we got into the strangle on the basis of, look, I think vol is extremely, extremely low. Given that this is a stock that could really continue to do some interesting things, right? And so when we look at the volatility level in MSTR, take a look right here, you can see going back, we hit this low level in the low hundreds, which was about the same as where we were in early November. Now, in early November, we were just kind of ramping up for this particular election move. And this is where things kind of got a little bit crazy to the upside. So in my view, we're still kind of in this environment. If we were in this really sort of quiet, sleepy type of environment, I know that's a wide range here still. It's not like we're trading in a $1 range, but relatively speaking, this is kind of quiet. Then I wouldn't be as excited about buying volatility at this level. But because we're still in play, right? Because in my view, this coin complex is still in play, that looks a little bit interesting for me. And so one of the things I forecast, I said, look, not only am I going to position myself delta long by buying a 330 call and a 230 put, which placed me delta long, right? So this wasn't a neutral strategy. A more neutral strategy would have been long the 230 put and long maybe a 370 call, maybe a 360 call. That might have gotten us a little bit more neutral. And sometimes people will like to put on a strangle when they're very, very agnostic about direction, but they think that volatility is low and something big could happen, right? There could be a big move on the horizon. For me, because of the things I've talked about already, I felt that the move could be to the upside. So I got more aggressive with the call, which made the structure more expensive. But I like that because I felt that the position could benefit to the upside. And if I was wrong, it probably would have fallen back down under 250. And I think volatility probably would have moved up anyway in that case. So I think I would have had a little bit of a Vega bailout as these calls lose value and these puts start to gain in value as well as implied volatility, right? That's that Vega exposure that is going to help you again to the downside. It can help you to the upside. It can help you to the downside, but you really have to understand the product well. And in this particular case, more of the time it's going to rise into a rise in the underlying, whereas a fall in the underlying tends to not get volatility too excited. But given that so many people were in it, a big collapse in the stock, I think would have also come with a rise in volatility, not as much as to the upside. The upside tends to command more of that rise in volatility and in option pricing that we're looking for, that at least I was looking for with this directionally long position. So again, how did we win? Well, we went from 305 to 360. I got out of the position around 361. It's a little bit higher now, but around 360, 361, we were delta long, so we made money on delta, but we also made money on Vega because we saw a very nice jump in implied volatility. So I'm not sure exactly what March did, but let's take a look at the near month. The near month went from 102 to about 123. And so that is a very, very nice exposure to Vega. Now, March probably wasn't quite as pronounced as that because this is going to the front month is going to absorb more of the panic buying in volatility. So March probably didn't benefit to quite the same extent, but it's benefiting. And we got that really, really nice move from our March position. So we benefited from Delta, we benefited from Vega, we have some negative theta. Remember, when you're long options, you have negative theta. So there's a cost to having this, to owning leverage, right? When I got out of this position, got out at 101.75, that's a 56% return in a few days. That's an incredible return for a strangle. That you're not going to get that very often because it happened so quickly. I didn't have this. It didn't really give theta a chance to really hurt, or Vega a chance to really hurt us. Even though vol dropped a couple points, the Vega did hurt just for a brief day, and then everything just kind of exploded to the upside. So you definitely have to understand your dashboard of Greeks here and how much these things could potentially make or lose you. And in one of my former videos, I vol shocked it. So I gave myself a better understanding of where this position is going to make money given a particular move in underlying volatility. Because if we're volatility traders, we're option traders, which means we're volatility traders, you have to incorporate a view on where option pricing is going to go. Unless you really feel that option pricing is going to literally not move at all, and you're just going to make money, on Delta, for example. But in this case, in a very volatile instrument like this, tied to a very, very volatile underlying, although it hasn't been as volatile lately, it is going to have that Vega exposure, and you have to incorporate that into your viewpoint. So when you're trading options, try to always have that, and make sure you're using a platform or a volatility analysis software that is giving you the ability to do that, like an option strat, a thinkorswim. You can move your expected volatility range around to give you an idea. Sometimes it's just a guesstimate. You can make an educated guess on where volatility is going to go based on history. And I talked about that in my earlier videos, and that's part of what we nailed in this particular trade. So hopefully you guys enjoyed that. Really, really great trade. Happened very quickly. Doesn't often happen like that, but we'll take it. And in my next video, I'm going to talk about the other two strategies that we put on, both doing very, very well to a lesser degree because they are simply not as structured to a move like this. They are, but they're never going to make quite the same sort of give you the same sort of bump from a big move that we've had, but still very, very positive results. So we'll talk about those in the next video, and we'll see you soon.